FOMO, no fear, subscribe, stay sharp, and dance with the stinky socks. Dance with the stinky socks. Dance with the stinky socks. Dance with the stinky socks.
Heaven's sakes, don't smoke your socks. Bought some Bitcoin late at night. Woke up rich, that ain't right. Checked again, never mind. Broke as hell, see that line? Maybe risky, maybe wild, but so is betting on Uncle Clyde. Do your research, read your blogs. For heaven's sakes, don't smoke your socks.
Don't smoke your socks.
1, 2, test. 1, 2, 3, 4, 5. Everybody hit that line.
No foam, no fear. Subscribe, stay sharp. Don't smoke those stinky socks.
All right, legends. Welcome to another live stream. I see people are starting to stream in at the moment. Remember to smash up that like button on your way in. Let's do a little bit of a recap of what happened this morning during my analysis and what is potentially going to happen right now. Does, as per the thumbnail, do the bulls have a chance? Can the bulls like to have a chance here to the upside? I mean, legends, it is so close. When I take a fib from this little low to the high, right, tap the 0.88, which increased the probabilities of taking the low. Or is the bulls fighting for their life? Is the bulls fighting for their lives? Also, when I take a fib from this low to this high, 0.88, right, we have the 0.88 tap over here. Not a common second wave target, but we need to give the bulls the chance. This little movement also 0.88. So now we have two 0.88 taps here at the bottom. You can see the bulls are fighting. Looks like we're currently getting a little bit of momentum here to the upside. But if you guys can remember, okay, when we discussed this little structure last week, because I had a lot of questions about this little structure that we formed here last week to the upside, right? When you take a fib from the high to the low that we formed over here, right? Do you guys remember what we discussed over here? When you have multiple 0.88 taps, you increase the probability of taking the high, and that's exactly what we did in a 5-wave structure. 1, 2, 3, 4, 5. And now you can see the bulls are fighting to hold this low, right? Because if you look at the structure at the moment, the structure still has higher lows. Low, higher low, higher low, ever so slightly higher low. And yes, surprisingly, the bulls also won, because I just want to point out also, when you take a fib from this low to the high, look at what happened there. So this probability does not always play out, but it plays out 70% of the time. So there's a 30% chance that we smash up here. Right, it's not a high probability because of two 0.88 taps, but you can see the bulls are fighting, right? Because if you claim this low over here, then you're going to start changing market structure. You have higher highs, you have higher lows, and if you claim this low, then you're starting to break market structure, which means that the probabilities increase, even if with the bounce you create a lower high and you continue momentum to the downside. Right, legends, as I pointed out this morning on the larger time frame, and we can go and look at the bearish case scenarios in a moment. Just want to quickly do a little bit of a recap, say hi to the community. From a simplicity perspective, legends, from a simplicity perspective, what you would like to see is for price, okay, it could still even claim this low. Remember, it can still claim this low, but not claim this low. The bulls have a chance because in a 1, 2, 3 to the upside, your second wave is allowed to retrace 99% of this wave to the upside. It's not allowed to claim the low. Right, so the bulls fighting for their lives here at the moment. And now the question is it going to find some upwards momentum, smash the trend, right? I'm personally going to be a little bit more patient with this trade, although the risk management is always fantastic, right? When you tap 0.88 like we're tapping over here, the risk management in terms of where your invalidation is absolutely fantastic, right? So there might be fear. Oh my God, what if I get stopped out? I'm not going to enter this trade. Right, I think that we're just gonna tank, and I have seen this. Okay, when we made this dip, right, look at the beautiful risk management. You put your stop loss below the recent low, you did not claim it, and we got momentum to the upside. It is the best risk management that you can ask for, because if you get stopped out, you take a small little knock, and this is usually where people are too scared to enter the trade. Right, legends, we have to acknowledge though, right, on the larger time frame, like I pointed out this morning, when you look at the structure, okay, we have tapped the 0.618 golden pocket. When you take a fib from the high to the low, we are at resistance at the moment. We are facing resistance. We also have that point of control, like I pointed out this morning during my live stream, okay. Just wait for that to load up. Right, this is where price is struggling at the moment. So there is a chance that the bulls are going to lose this low. Right, and we could be looking at a larger corrective structure to the downside. And let's call it corrective for now, because there's a chance that this is a 1, 2, 3, 4, 5 bullish impulsive wave to the upside. It completes a corrective structure to the downside. It makes a higher low, okay, without claiming these lows. Hopefully find support here, maximum target, the value area low of this entire range, and then it punches to the upside and the bull market continue. This is what everyone wants to hear. This is what everyone wants to see. I can see it in the comments of other people's live streams as well. The sentiment is still bullish at the moment. There is still a little bit of hopium. But I can tell you guys now, we should not change market structure. If we claim these lows over here, right, you're starting to change market structure, because now you have locally a lower low, right? You go up, you make a lower high, maybe retest the scene of the crime, and you continue in a three-wave structure to the downside, which can still turn out to be bullish, but potentially finding support here above the highs. You have a beautiful three-wave structure, and then we continue the momentum here to the upside. 4, 5, right? 1, 2, 3, 4, 5. That could even go and hit $120,000, $125,000, even $130,000. Who knows, right? But this is now the scary moment, because every time the price pumps, people get euphoric, okay? They get excited. Altcoins are going to finally lift off, right? And then we go into a corrective structure. People lose hope. Oh man, now we're going to range again. Now we're going to go sideways. How boring. Right, legends. Maybe there's the chance. What if it does this, right? I will definitely be keeping an eye on this little pivot over here, right? Or even this local high for a swing failure pattern. If price for some miracle and the bulls can defend this level and it goes and it makes another high, right? I will definitely consider a swing failure pattern from the local high. Price pierces the level, it struggles, it falls down below this high, it trades below. That is where I open up my short position and I put my stop loss above the high. Okay, even to come and claim these highs over here as a minimum target, right? This could be an epic swing trade here to the downside. Right, legends, I am still in the trade from this morning that I highlighted here on the smaller time frame, and we can go and spend a little bit more time on the larger time frame in a moment. Okay, so let's just wrap up the smaller time frame and just do a little bit of a quick recap. Okay, currently you can see the bulls, hey, they're defending this level. I want to see what CVD is doing. I mean, we had some massive bearish CVD building up. Okay, look at these pivots, right? You had massive bearish CVD building up. The target was this low, Okay, even between this pivot, the target was this low. So the fact that price took the lows means that this bearish CVD actually played out. It's done. Look at this bearish CVD. Bearish CVD. You have higher highs on CVD, okay, higher highs on CVD and lower highs on price action. So in theory, because of these little lows that was created over here, the bearish CVD played out. Okay, and now more locally, I don't see any weakness at the moment. So potentially the bulls can step in here and take control of the situation. I want to put this a little bit softer. Okay, let me say hi to the community and we can continue the technical analysis over here. Afternoon, Dewald. Welcome, Danny, to the live stream. Irina, always great to see you. You just finished watching your previous stream. And here I am doing the recap of what happened this morning. Legendary intro. Welcome, Zach. Hello, Dewald. Welcome. Smash the like button. Yes, if you haven't done so already, smash up that like if you haven't done it. Also helps the YouTube algorithm spread the video to people that have not seen it yet. Olivir, welcome here to the live stream. I learn more TIA here than anywhere else. Thank you so much. Much appreciated. Thank you for all the gold. Absolute pleasure, man. Absolute pleasure. Right. Just some laugh advice. Hello, chart lovers. Have a great trading day. Rudy, welcome to the live stream. Long on everything. Right. Legends, there's something peculiar that I want to point out over here. Something very interesting I want to point out. When I look at some of the altcoins, something very, very interesting. Okay, I want to go through that as well. So stay tuned for the alpha not to miss out on everything. Okay, right. I am in a short position. Not sure where you opened the short, but yes, I'm also still in a short position. I've already taken most of the profits here to the downside. And right, Terry, welcome to the live stream just to finish it off. Right, Terry. So this morning, Legends, inside of our Legends Pro community, we spoke about this short. Epic short here to the downside. This short. Right over here. Okay, that is what we discussed this morning. And I told the Legends, well, if we have any chance of moving to the downside, rejected by the weekly point of control, let me switch that level on. Okay, weekly point of control, that is where we got the SFP. So that you either play the swing failure pattern, and if you've missed the swing failure pattern where price pierces through, it falls down below, you enter with your stop above the high. There was another opportunity to get in, and this was the opportunity that we spoke about. Okay, and this is being very, very technical here on the smaller time frame. I'm not sure who else on YouTube can scalp the smaller time frames like this, Legends. We had the fib from the high to the low. I had my little box inside of this zone over here, and I said, Legends, this is where price has to reject. Otherwise, I'm looking at a couple of levels to the upside, right? The 1-to-1 extension, I basically took a fib from the low to the high to the low over here, and there was a 1-to-1 extension. There was a 1.236, a 1.618. So I had a trading plan to the upside to look for shorts because it looked like price wanted to roll over. So if this level did not hold, I was looking at levels to the upside. I had my plan ready. Right, and then we rejected over here. This is where I entered with my stop above the high. As we were falling here to the downside, I protected my position and I took profits. Okay, I still have 10% running. I've taken 90% of the profits because I'm a day trader. I pay myself on the way down and leave a little bit of a moon bag open for in case we do fall down lower. And now we're getting this nice little relief rally here to the upside. Okay. Not much volume kicking in here at the moment, but the risk management was absolutely insane. Okay, fib from the low to the high, you're bouncing on the 0.88. Okay, the 0.88 gang, are you guys here? Let me know if the 0.88 gang is over here. Miss Melanie, welcome. All the way from Los Angeles. Hello, Dewald. Give us a bull hopium. Yes, let's give the bulls a little bit of hopium over here. As long as you do not claim this low, you bounced here on the 0.88, there's a chance you still have a higher low. Okay, this is the trend that I will be keeping an eye on. This little trend over here. Maybe, you know, before you get to the bigger trend. So maybe there's a smaller scalp over here if you did not get into this trade. For some reason, I don't understand why people do not enter over here or over here. People wait. Okay, if you want to get into a long, why did you not take a chance over here when your risk management is absolutely insane? Okay, because if I had to now go and plan this trade, I'm not in this long, by the way, legends. I'm going to tell you guys how I'm planning to get into this long. I'm not in this long just as yet. But from a risk management perspective, okay, if you entered here by the 0.88, you're targeting the high of this range. Okay, let's just keep it simple. Your stop loss is glued to the low. This is insane risk management. Look at how close price action is to your stop loss. That's a trader's dream. I want to enter as close as possible to my stop loss. Because if you're entering right now, you're exposing yourself to a hell of a lot of risk. This is a lot of risk that you're exposing yourself to. Okay, blindly just FOMOing into a trade. The risk to reward doesn't make worth it to enter this trade anymore. It's not worth it. Okay, if you have a FOMO strategy, by all means, go knock your socks off. But this is not where I get into a trade, right? I need to be able to apply good risk management. And especially considering that I know that this is resistance here to the upside. Where's my pen? This is resistance. You have a weekly point of control. It's a place where I have to consider taking profits. If you enter over here, it doesn't make the trade worth it. Now this makes the trade worth it. Scary moment, but the risk to reward is amazing because this is a 5.74 risk to reward. Okay. And as you're hitting resistance to the upside, you can already start paying yourself because that's what you do as a day trader. You don't care about $100,000 Bitcoin, okay? You care about winning this trade. You've planned your trade. You know why you're entering. You're tapping the 0.88. There's a chance that the bulls can win with the structure here back to the upside. There's a chance to break the trend line, okay? The risk is worth it. It's a tiny little stop loss. So if price had to turn against you, okay, you lose less capital than trying to FOMO in here and then you lose all of this money. Okay, it's just not worth it for me to enter right over here. It's not, the risk to reward doesn't make sense. Okay, right, legends, unless this is how I plan to get into the trade. Sometimes, okay, you need to be a little bit patient. And there's another way to get into the trade. When you make a low, you have to count a 5-wave structure to the upside. So I can count 5 waves in that structure, but it also looks very much like a 3-wave structure. So not too confident. And this is why I didn't enter the long trade. I want to see a sign of strength, because if this is going to be a 1, 2, 3, 4, 5, if I can count 5 waves here to the upside, it needs to break the trend. Volume needs to start kicking in. I'm going to be interested in the retracement. This is where I'm going to get into the trade. Playing the breakout of this trend or an SFP, maybe find support above the highs over here where it's currently at the moment. But you guys can see by me being patient, I can get in exactly where price is at the moment. I don't have to FOMO. I can wait for the structure to play out, to show me the way. Okay, this is a 5-wave structure. This is a bullish structure. The corrective structure looks very 3-wavy. It forms a beautiful trend. Now I get into the trade. And you can see that I'll most probably get into the exact same spot where price is right now. Because then this forms a 1, 2, 3, 4, 5 to the upside, that I want to benefit from this momentum to come and claim the highs. Okay, so I know that I can still get into the trade by being patient. For now, it's a battle between the bulls and the bears. And if you didn't enter over here, this is for me a no trading zone based on my trading strategy. If you have a different trading strategy, by all means. Okay. Cool. Right, legends. So that's basically what transpired here on the smaller time frames. Because this is a 5-wave structure to the upside, there's a chance that the bulls can create a higher low and go and claim the high again. But this low needs to hold. Very important. If price falls down here aggressively and it takes this low, I'm going to be looking for shorts. Well, like I did today. I was in a short today and I'm still in a short. But the retracement is going to be very interesting for potential short. Maybe it starts hitting the resistance over here. Okay, bearish CVD building up between this pivot and this pivot. I will be aggressively looking for shorts once we take this low. But there's also a longing opportunity here, by the way, legends. You know, there's so many opportunities. I sometimes struggle to explain all of them in terms of what I'm looking at. If I go here onto the 1 hour time frame, let's take this FIP out the way. Let's clean up the chart. I take a FIP here from the low, from this little pivot where everything started to the high that we've created over here. If price does decide to fall here to the downside, okay, 0.382 has not been tapped. When I look at this low to the high, usually when you tap a major FIP level, okay, 0.382 being the minimum major FIP level, not the 0.236. Usually when you tap a major FIP level for the first time, you do get a reaction. So even if price takes the low as a day trader, okay, I can take advantage of this move, right? I can take advantage of that. It's a beautiful trade. It's beautiful risk management. It's a beautiful risk to reward. I have to unfortunately see the price that I want to see before I will attempt the long back to the upside. So if that's my trade, 5.47 risk to reward, tick. Why am I entering swing failure pattern? Okay, price is finding strength back above the 0.382 and it's getting acceptance back above the low. Price needs to trade back above this level before I will consider a long. As long as price is below my level, I ain't interested. Okay, because I know and you know, I know most of you don't do this, but there are always 1 or 2 comments that I get. Okay, Dewald, you said this level is going to hold. I put a limit order there. Price did not hold. I'm like, well, you are to blame for that trade, right? I'm saying, I'm highlighting the levels that I am watching for potential trade. What I do is I put an alarm. I will put an alarm over there. Once the alarm goes off, I come sit in front of the charts if I'm not sleeping and I have time to come and sit in front of the charts, and I will observe the price reaction. If there's no reaction and price is trading below my level, no long trade. Okay, please guys, don't go and slap in limit orders with no stop losses thinking that price is going to bounce. You might get lucky a couple of times, but there's going to be a time where you're going to liquidate your account or your position. Please. Right. Okay, cool, legends. Now, gone through the smaller time frames over here. Something that I just wanted to also quickly point out is make sure that you have your levels marked out, because levels marked out to the upside and to the downside gives you longing and shorting opportunities. It also gives you profit taking areas. So if you have resistances marked out on top, okay, resistance areas, and you have support areas marked out at the bottom, and you are in a long, you know where to take profits. They also become shorting opportunities. If you are in a short and price falls to the downside, you know where to take profits. They also become longing opportunities. But for me, I have to observe the price reaction when you hit those levels, because often you slice through like a hot knife through butter, and other times you get a beautiful reaction. Like the beautiful reaction we got at the weekly point of control. I mean, this was a beautiful reaction. Yes, on the 1 minute time frame, because this is how I sometimes scalp. Okay, now this, legends, is a beautiful swing failure pattern. Absolutely stunning. You make a pivot, you pierce the level, it starts trading below. Even if you were a little bit late to the trade or you wait for the retracement, you get in at the retracement. You take a fib from the high to the low. You don't want the 0.88 to be tapped. It found support or resistance here at the 786 and it fell to the downside. This is the trade that we took together. this morning as the community. Okay, well, I hope everyone took that trade. Right, Mr. Mark Dutch, welcome to the live stream, man. Always great to see you here. Dewald, you said during the morning stream that you would be looking at the macro and how the cycle could end this time. Yes, I am going to go. I just want to wrap up the smaller time frames, and then I'm going to go on to the 4-hour, 8-hour, and then we're going to look at some of the corrective structures that could still be in play. And yes, there is still a chance. I have gone through some of these structures, but I want to take everyone through it. There is still a chance. Unfortunately, I wish I had better news that $74,000 can still be claimed. Just has to be said. Right, Dewald is the type of guy who licks his fingers before turning the page. You guys are funny. Right. Okay, cool, legends. Now, I've stuffed around on the 1 minute time frame, the 5, the 15-minute time frame. The one last thing just to wrap up here on the smaller time frame, looking at this little structure is, okay, very, very interesting. Something that I'm looking at. Let's go to the 1 hour. Let's start going to the higher time frames. When I look at this entire structure that we have formed, you will see I have some weekly levels marked out. More importantly, okay, I love the VRVP. It's called the VRVP. I'm not sure if everyone can see that. It's called VRVP. Okay, let me see if I have it here on my indicators just to show everyone. It's not here. Okay, but it's called the VRVP, guys. VRVP. Okay, when you switch on the VRVP and you are a type of trader, you still struggle with support and resistances. Okay, look at these high volume nodes. Look at, beautiful high volume nodes. Often what happens if you struggle to identify proper support to the downside or resistance to the upside, you can look at a structure that you are keeping an eye on, and then this tells you where the most amount of volume was traded. You can see here where price is at the moment, loads of volume. But this is where it becomes scary. Below these lows, there's not a lot of volume. Almost like an empty gap, and then there's two little thingies that's sticking out here like a sore thumb, right? So maybe this becomes a support area inside of this consolidation area. Okay, now this is where it becomes interesting, because that usually aligns with weekly point of controls, daily levels, weekly levels as well. So to make it easy, my stuff folder that I have over here, I've already identified the critical support areas to the downside. Okay, and you'll see if you zoom in and you put more price action onto the chart, the bars will change because now it considers the volume for those ranges as well. Okay, right now, when I take a fib from that low that I've spoken about to the high, okay, this is where things now start aligning. So you can see the 0.382 eating up the liquidity below these two lows over here doesn't really have a lot of volume supporting it, but you could still get a reaction, and that's why I'm saying I have to pay attention to what reaction we're going to get there, because it could just slice through until it hits this 50% Fibonacci that has a little bit of volume sticking out over here. I'm not sure if you guys can see that. Switch on your VRVP, you'll see exactly what I mean. If I switch on my point of controls, my daily levels, just make a mess of everything over here. Okay, you have to sometimes dirty the kitchen and then clean it up afterwards just to see, well, where are the most important levels. So you can see here at the 50%, we have a naked point of control, and there's that volume as well. Okay, so the strongest short-term level to the downside is actually the 50%. A little bit further down, we have another naked point of control and this little volume node over here, okay, just below the golden pocket. So it does look like if price had to find momentum here to the downside, it's most probably going to pierce the golden pocket, and I'm going to be waiting for a swing failure pattern from this naked point of control. A little bit further down, you have the 786 with another high volume node. But what I'm trying to point out over here is you can see that my support boxes aligns with Fibonacci levels point of controls and high volume nodes on the VRVP. That is very important. So that's where the planet starts aligning. That's where I'm looking for long opportunities. If I am in a short, that's where I take profits, because you could get bounces at those areas. The strongest area of support, obviously, now you can see when I look at the entire structure, the strongest area of support is this mess over here. Look at this wall of volume. Massive, massive volume. So if things get really nasty and aggressive here to the downside, this is an area you want to pay attention to. Okay, a wall of volume. And I think, obviously, if price is going to come down this aggressively, you have to take your fib from the entire structure. Because then it means that this structure is done. This structure is done. Now you have to take a fib from the low to the high. For now, I'm only looking at this structure. But if price is going to start falling aggressively and just smash through all of these support zones, okay, now you can see where the planet starts aligning. Okay, let me just clean up the chart, legends. I don't like to work with a dirty chart like this. Okay, so from a simplicity perspective, you can see this little red line over here is the point of control. This is where the most amount of volume was traded inside of this structure. Also inside of this consolidation area. You have a wall of volume, you have the golden pocket, okay? So maybe that is where we form the higher low and we continue momentum back to the upside. Right, legends, I love to educate. What can I say? This is how I do my stuff, okay? And if you can learn something from this and apply it to your own trading strategy in terms of how to identify support and resistances, and you can trade that successfully, I'm happy that you are able to take this knowledge and make it part of your trading psychology and strategy. Right, legends, now, the most obvious level is this little area over here. So whatever happens over here, if price comes to this zone, very interesting area to pay attention, because this structure could correct itself, find support, okay, even here by the 786. This is the last line in the sand that needs to hold, okay, as a little bit of a high volume node over here. Ideally, you don't want price to tap the 0.88 because you all know that increases the probability of taking the low, but you still have a 30% chance to bounce from the 0.88. So ideally, price finds support inside of this zone. It forms a higher low and it continues. Okay. Right, legends. Now, I want to zoom into the larger time frames, because this morning, you guys asked me, Dewald, please can we look at the corrective structures on the larger time frames again? So let's do that. Right. You guys can just see how this volume sticks out like a sore thumb over here, right? Sore thumb over here. Anyways, let's switch off the VRVP. Let's work with a blank slate of paper over here. I'm not going to go through this again. We all know we reject it in the golden pocket when you take a fib from the high to the low. We all know that this is the point of control where the most amount of volume was traded. Now you guys can also see how this volume that is created during a range creates significant resistance and a tough nut to crack, okay, for momentum to continue to the upside. Now the question is the low in? Okay, the easiest way to explain the corrective structures that I'm about to go through, legends, is that the first thing we were looking at is this: once you create a low, okay, the most important thing you want to see is a 5-wave structure to the upside. One could argue that this is a 1, 2, 3, 4, 5. So there's a chance that this is a 5-wave structure. Thank goodness. From this low, we can see a 5-wave structure. Now, the second step is you need to form a higher low, because you need to form a 1, 2, 3, 4, 5. So this becomes 1, this becomes 2, this is 3, this is 4, and you create another 5th wave to the upside. Okay, this is the simplest impulsive structure to the upside. You can also form contracting diagonals, ending diagonals. Okay, I'm not going to keep it too complex. Most important thing is, now that we have a 5-wave structure to the upside, you want to form a higher low for continuation. Let's just keep it simple, because you can also form contracting diagonals. 1, 2, 3, 4, 5. It rejects and then it continues. I don't want to overcomplicate the scenario over here. Okay. The thing that we did not want to see is a 3-wave structure. And when we were over here, it just heavily looked like a 3-wave structure. But now luckily we got this another leg here to the upside. But we're not out the woods just as yet, legends. So from a simplicity perspective, looking at the structure on the 8-hour time frame, it could still be a 3-wave structure because of how small the 5th wave is compared to, look at how long the 1st wave is, look at how long the 3rd wave is, and now you have this teeny weeny little thing that sticks out on top. Doesn't really look like a 5th wave, but technically we could say it's a 5-wave structure. At least it doesn't look like this. This, if I zoom into the 4-hour time frame, was a clear 3-wave structure. 1, 2, 3. We were waiting for 4 and 5. We didn't get this 4 and 5. What happened? We claimed the lows. So the bulls at least now have a higher chance than what happened over here. I saw people force counting 5 waves inside of that structure. Okay, I think you can see it on the 4-hour time frame. Yes, now you guys can see beautiful 3-wave structure. 1, 2, 3. And then I saw some people counting 5 waves inside of that structure, and I was like, no, it really looks like a 3-wave structure. Okay, and we claimed the lows. Right, because 3-wave structures are corrective structures. When you have a dump to the downside and you form a 3-wave structure to the upside, you increase the probabilities that you're going to come and take the low. Okay, so you want to form a 4 and a 5. Then you increase the probabilities of making a 3-wave structure to the downside and continue in that direction. Right, so now at least when we look at this structure, one could argue, well, maybe. Okay, so if the bulls win, you know, I think now this will become interesting. If the bulls win this battle over here, and we do not claim this low, and we break the trend, and we form that 1, 2, 3, 4, 5, the retracement becomes bullish. Now you have to consider, well, okay, you could form your 1, 2, 3, 4, 5. In a proper 5th wave here to the upside. Proper 5th wave to the upside. 1, 2, 3, 4, 5. Your 5th wave has 1, 2, 3, 4, 5. Okay. I don't know if we're going to go that high, legends. We can go and work out the target, you know, just to speculate on this scenario before we move on. Take a trend-based fib from the low to the high to the low. Okay. 1.618 is a 3rd wave target. So let's say we hit 3rd wave over here. We create a 4. We go up for 5, which usually finds rejection over there. Okay, then you are looking at a structure that could potentially end at $104,000. If this is going to be 1, 2, it does not take the low. It must be said that the 0.88 that got tapped over here is a very rare target for a wave 2. But until we claim the low, the scenario is valid, where you could build a 1, 2, 3, 4, 5. Okay, $104,000. Then we're going to have a clear 5-wave structure to the upside. Okay, I think this is just going to look a lot sexier here to the upside. 1, 2, 3, 4, 5. Yes, clear 5-wave structure. This one is just a little tease, but you can also consider it a 5-wave structure. Also, what I mentioned this morning, there is, you know, when I take a fib from the high to the low, drag it across, I reverse it, we did tap a 5-wave target to the upside. Okay, this is a method to measure a 5th wave target. Look at where it got rejected. 1.618 to perfection. That, ladies and gentlemen, is also a fifth wave target. So even if price does fall here to the downside, we can validate this high as a 5-wave structure from the low of $74,000. 1, 2, 3, 4, 5. It did hit a fifth wave target. Okay, now back here onto the 8-hour time frame. Okay, and before we continue, I'm going to go through some of the corrective structures now. Remember, legends, down in the description, okay, is the exchanges that I use to do my daily trading. I really enjoy Weeks because of their low fees. When you select the link down in the description, you get 25% discount on your trading fees. And when you do scalping, like I sometimes do on the smaller time frames, it puts more money into your pocket, and you don't blow everything on trading fees, and then you have to trade bigger moves to try and make up for the trading fees. So the 25% discount on trading fees really makes a big difference. You also get 20% back on the money that you deposit into your features account to trade with free, that you can use towards stop losses, or maybe, you know, a nice little high leverage position to the upside. Whatever you want to do with that cash, it's up to you. The first 100 people also get $100 extra, okay, for free to trade with. And if you want to go and spin the wheel, okay, there's a second link here for Weeks down in the description. This is where you can go and spin the wheel. I have 0 spins here at the moment, but you can, you know, spin the wheel and win guaranteed prizes here on Weeks. And then I've got Bluffin. Some people don't like Weeks. They like to trade with Bluffin. I have seen that Bluffin is for more bigger account players, $10,000 and up, because they enjoy the UI and they enjoy the liquidity that Bluffin has to offer, right? But for both of these exchanges, you only require an email and a password or a cell phone number, but you don't have to submit documents, and you can start features trading. Right, so it's also your way to support the channel, and this is where you get the best deals that these exchanges has to offer from the links down in the description. Okay, right, legends, now let's take this out the way and delete that trend. Let me go through my scenarios. Okay, that was actually the bullish case scenario that played out. Okay, ABC to the downside. Okay, this scenario is still very much valid, legends. Just look at the thick orange line. We're not out the woods just as yet. If this was the end of the bull market, and some people are now speculating, okay, that price is still going to move to the downside, well, one could argue, well, all of this was a wave A. You have a 1, 2, 3, 4, 5 contracting diagonal in a wave A. Now we have this upwards momentum over here that is in the process of completing the B. And the reason I'm saying it's in the process of completing the B, okay, because some will say, why don't you just put it there? There's an issue with time. So when I measure where the impulse ended to where it, or started to where it ended, you can see that this high, ladies and gentlemen, was made before the 0.382 from a timing perspective, which means that this B wave here to the upside is too short for the A wave. Okay, the B wave ideally finishes after the 0.382, so it still needs to continue in time. Time for me is a very important factor, and not a lot of people technically look at the time relationship of waves. I find it very difficult to put my B wave over there, because if this is an A, B, and we're now falling down in a C wave, B finished before the minimum target from a timing perspective. So I would still like to see a dump and another high, okay, and then that makes more sense for a B wave. B waves are also 3-wave structures. What if this is a WXY that's going to form over here? Okay, let me just take the scribble here out the way. I need to just adjust this count. So this is W, C finished over here. We're going to go down for a X. Okay, still form that higher low. Can you guys see? Still going to form the higher low. right? Let's put this there, put the C there, put the A and the B. Okay, I need to adjust these structures, okay, so that it now flows a little bit better. Okay, I can even move the B up a little bit. Okay, now it's all going to make sense, guys. So, because this high was made before the 0.382, a B wave, okay, has to be a three-wave structure. So one can say, well, what if this is an ABC? This is a three-wave structure. This is a problem. Okay, so maybe an ABC, what does an ABC give you when you put it together from a longer corrective structure perspective? It gives you a W. So whatever is happening here to the downside could also be another ABC to form a X. Then you go back up for another ABC to form your Y. W, X, Y, three-wave structure in B. It finishes after the 0.382. You can still go down for a C wave that can even tap $62,000. So never out the woods, legends. We are never out the woods. I have discussed all the bullish case scenarios that could still play out in this structure. You can form that higher low and you go and complete the bull market to the upside. A good technical analyst will always have a bullish and a bearish case scenario. So I'm specifically now focusing on bearish case scenarios. The bearish case scenario is that the B wave is not done. And we're going to form a B wave in a WXY, three-wave corrective structure inside of your B wave, and then all hell breaks loose. We go 1, 2, 3, 4, 5. Then, luckily, there's still good news after this monstrosity to the downside. Because after you've completed your C wave, A, B, C, okay, C wave can also tap the 786. It is a little bit more rare, but I have seen C waves successfully claim the 786 and then it continues, impulses back to the upside. So after a corrective structure, then what you want to see is a 1, 2, 3, 4, 5, A, B, C, 1, 2, and the bull market continues. Okay, so not out the woods just as yet. Right, there's another one. Just want to see. Yeah, this one is still very much valid. Very similar. It's just a different count. But it's the exact same end result, legends. The exact same end result. Okay. Remember, I'm not sure, last week I told everyone it would be so nice, even now where price is here at the moment, it would be so nice to come and claim this level because that will invalidate a WXY. Can you guys see how similar it is? A, B, C, W, X, Y. But at least we will invalidate the WXY. The same thing, three-wave corrective structure. If by some miracle the bulls can find strength in the zone and move up to $102,000, 277 and claim this area, you will invalidate this corrective structure. But this ABC will still be in play. Okay, but at least we'll invalidate this one. As long as price rejects over here and falls to the downside, it can form an A, B, C to the downside that comes to claim the lows again in a WXY. So it's a slightly different count, but it's actually the same end result. If price can claim the invalidation that I have over here because an X wave, okay, when it taps the 786, when I take a fib from the high to the low of the structure, you can see that that invalidation is at the 786. When the X wave taps the 786, it significantly reduces the probability that your Y is going to take the low of W. Okay, which is actually this one. And this scenario that I told you, that I'm telling you guys about now, once you claim the 786, the probabilities of taking the low of W significantly reduces. So you could, then you're going to look at a Y wave that finishes, it makes a higher low, which is still a bullish structure. So you could complete a W, X, Y, still form a higher low. You do not take these lows and you continue the bull market to the upside. But because price is now rejecting here by the golden pocket, the probabilities for now is still high that you could go and claim the lows in a WXY. You then take a trend-based fib from the high, okay, because now you have a WXY inside of W. That's the best way that I can count it. You can also count this if you want to, legends. You can count this as an ABC. WXY doesn't really matter. For me, it counts better as a WXY inside of W, a three-wave structure inside of W that ended over here. Then you have an A, B, C in X. And now you're going to form another A, B, C to complete your Y wave. Okay, this Y needs to be there. Common corrective structures for this scenario to the downside is the 0.618. It's the minimum target. Okay, the rule for this structure is to say that if your X did not tap the 786, the minimum target is the 0.618 over here that I've just covered now with my scribble, but it has to take the low of W. It has to take the low at least. So it can literally do this and bounce. Double bottom. A lot of people are going to say, okay, double bottom. Here we go. Off to the races. Bull market's back. Yes, high probability. Okay. Especially if you claim the 0.786. The most common target, unfortunately, is a little bit further to the downside. The most common target for a Y wave is the 1-to-1 extension and the 1.236. That's very deep. That's very scary. Okay. Inside of this structure, I just have to point out, inside of all of this that we have formed here, to the upside, to the downside, to the upside, to the downside, I have seen many WXY corrective structures that found support at the 786. Okay, so first target, $68,000, 717. Less common, but still a target. Okay, $74,000, 300. Basically the low. It's basically in perfect confluence with this low, where you form a double bottom and you continue the bull market. Right, legends. Switch this off. So now you guys can see we're not out the woods just as yet. Okay, I just want to see if I have other scenarios. These were the most important scenarios. Just want to see. This is the most bearish. Okay, guys, ladies and gentlemen, let me just take a sip of water over here. I don't even want to talk about this scenario. Yes. Alicia, I agree with you. I agree with you. All of the bearish case scenarios is most probably going to invalidate the 4-year cycle. But there's something that I want to say about that. Let's just talk about the most bearish case scenario, because this one's also going to invalidate the 4-year timing cycle. Very interesting point that you're making over there. Okay, guys, ladies and gentlemen, this is the most bearish case scenario that I have. Is that all of this to the downside was a 1, 2, 3, 4, 5. This is a corrective structure to the upside to form a wave 2. Now you have a 1, 2, 3, 4, 5. This, ladies and gentlemen, is the bear market. You then form a higher low, and this entire structure on the daily time frame, so it's still bullish. In long term, I'm still very bullish on Bitcoin. But you guys can see from the lows that we've created during the previous bear cycle, this then becomes a 1, 2, 3, 4, 5. But this becomes your bear market. This scenario has the lowest probability out of all the scenarios that I've just shared. There's a couple of problems with this scenario. It's not been invalidated, but I'm giving this scenario the lowest probability. It's something that we have to keep in mind, and it's something that could play out, but this is the most bearish case scenario that I do have at the moment. Okay, there's problems with the structure here to the downside. Low probability, but something to keep in the back of your mind. So I'm not going to dwell on this for too long. Okay, right, but I think the most important thing to take away from this structure over here is, okay, let me just put that back, is, let me switch this off. If we are going into a bear market, let me put the chart here on the log scale. Because I do know that there's a lot of people saying we are in a bear market. We have already completed 5 waves to the upside. 1, 2, 3, 4, 5. This, ladies and gentlemen, is the start of the bear market to the downside. Well, if it is the start of the bear market, long term, I am still extremely bullish on the price of Bitcoin. Because, guys, you have to remember, if this is 1, 2, 3, 4, 5. 5 waves to the upside. Well, now that is bullish, okay? Because imagine this is the 1 minute time frame, the 5 minute time frame. When you have 5 waves to the upside, like we've just been wanting now this whole time, this local structure, yes, we can count 5 waves to the upside. Thank goodness. Shoo, right? When you have 5 waves to the upside, you take a fib from the low to the high. Okay, high chance that even if we are inside of a bear market, you're going to form a higher low. Look at this beautiful consolidation area over here. And then, ladies and gentlemen, drum roll, you're going to see face melting price action to the upside. Because for this one, you have to zoom out a little bit, okay? Because now this becomes 1, 2, 3, 4, 5. This is insanely bullish, guys. Like, really insanely bullish. I want to put that as the cycle, or let's put it as the primary. Let's make it green. This is still insanely bullish. So long term, okay, this is now what everyone is fearing. If the worst case scenario had to play out, and this was the top, and we created a beautiful 5-wave structure, and this forms a deeper corrective structure, it still becomes a 1, 2, and then the next bull cycle is going to be way more aggressive than what you saw over here. Because a first wave is a mini wave compared to a third wave. The third waves are the most aggressive, they are the most bullish, they are the most extensive, and there's a high chance that if this scenario had to play out here, when people then say we're going to hit $1 million Bitcoin, yes, they must probably right, because this third wave has the potential to go and smack $1 million to the upside, but it will only come after a deep correction. Okay. Because in Elliott wave theory, just to put it simple for everyone, okay, when your first wave is usually like, okay, it's the start of something. It's the third wave that's the most aggressive and the most explosive, okay, because when you take your trend-based fib from the low of 1 to the high of 1 to the low of 2, you reverse it back to the upside, your minimum target usually for a third wave is the 1.618. Then you create 4, and then you create 5. Okay, so it is 160%. So it's basically 60% more impulsive than your first wave. At least. Your third waves can go 2, 618, 3, 618. They love 618 targets. They can just rampage to the upside. This is usually considered your minimum target. So what I'm trying to explain and highlight over here is that for the bears that believe that we are inside of the bear market, we're not going to go and claim the all-time high again. Okay? It is then the next cycle that's going to be face melting. Because this wave is going to be at least 60% more powerful than this wave. Okay, right. It can even be 160, 260, 360%. I'm just highlighting minimum targets over here. Right. So, you know, I just wanted to highlight that even the bearish case scenario is not so bad, right? It might feel like a complete and utter disaster, especially for our altcoin portfolios. Okay, so let's now go and quickly look at, I don't know if I'm going to have time. I'll do it another day. I'm going to do it another day because Alicia, I can't, struggling to pronounce your name now here at the moment. Okay. I think there is still time, even if we make another corrective structure here to the downside, and then we go and we pump here hard to the upside. I think there is still enough time to take this low and go to all-time highs within this cycle. There's still enough time. Remember, the cycle does not have to end at the end of October. It can extend until November, even the end of December, and it's still within range. Okay, because it's never exact to the exact month and to the exact day. Some bull markets are a couple of months longer. Some bull markets are a couple of months shorter. Some bear markets are 11 months. Some bear markets are 13 months, but they are within the range. So if I just keep it very simple, okay, I know this is like really, really, really simple. Okay, if I just draw out with a pen, based on the waves that we have formed over here, let's clean it up. So let's say price pumps here, it comes back down, claims the lows, and then it starts moving up aggressively in an impulse here to the upside. You can see that just based on what I've drawn over here, that is 20 August. So there is still time to claim the lows and build an impulse to the upside. Look at the strength, impulses to the upside. Make another high before the 4-year cycle is finished. Okay, the end of October is over here. That's the end of October. Okay, that's our deadline. Let me actually just, do it a little bit more professionally, guys. Let me put in a horizontal line over there. Where's the horizontals? Okay, vertical. Sorry, vertical. Let's put a vertical line on the end of October. There. So that is according to the 4-year cycle theory when the bull market is supposed to come to an end. So there is still time. There is still time, There is still time. Right. And remember, the cycle does not have to end at 30 October. It can extend up until the end of December. It can extend a little bit. It doesn't have to be the exact month, the exact date. Okay. So, remember to smash up that like for the education. I hope you guys are enjoying the analysis over here. The links for the exchanges that I use always down in the description. Your way to support the channel, to make sure that I can continue coming here every single day delivering the alpha. Okay, what did I do? What did I do? Dewald, what did you do? Oh, you just zoomed in. Right. Ideally, guys, what we are going to see over here is maybe that's 5, maybe that's 5. Doesn't really matter. Okay. For now, I'm going to say it again. The probabilities, let's talk about probabilities. For now, based on the price action that I see over here, the probabilities are still higher to claim the high before we claim the low. Whether that be in a corrective structure, impulsive structure, I don't care. Based on this structure, the probabilities are still higher to claim the high before we claim the low. So even if we still come down here and then we bounce and claim the high, fine. If we make a higher low and then we claim the high, fine. But looking at this structure, the probabilities are higher to claim the high before we claim the low. Just putting it out there. I'm not going to talk about the $500,000 Bitcoin or $200,000. Let's just call it realistic. Okay, the probabilities are higher based on the structure to claim the high at least at $110,000 before we claim $48,000. Okay, nothing's ever guaranteed. It's a game of probabilities. It's just the probabilities are higher to claim the high first. Okay. Right. And now the question is for the bulls, because now I've discussed all the bearish case scenarios over here. Damn, Dewald. Okay. WXY. ABC, it looks scary. You know, is this going to form an A, B, okay, 3-wave B, and then a 5-wave C here to the downside, and then we, you know, it looks scary. Ah, damn, we're going to claim the low. Okay, WXY, WXY, 3-wave structure. Ah, damn, we're going to claim the low. Well, there is a little bit of glimmer of hope, and this is what we all have been waiting for. On the 8-hour time frame, because we can now see a 5-wave structure. I'm not going to say it's a clear 5-wave structure, but because we can see a 1, 2, 3, 4, 5, a teeny weeny little 5th wave to the upside. But you know, it's hopium. Thank God we can at least see a 5th wave here to the upside. Okay, there's a chance that this is an impulsive structure. It's going to create a higher low, and from this point the bull market can continue. So this is what the bulls are hoping for without taking the low. So there is a chance based on this structure, okay, that we can continue the bull market to the upside. But it's not going to come without retracements. And usually when we get these consolidation areas, or even this little dump that we're seeing here to the downside, that's where the fear kicks in. Okay, I see, you know, people see the red candles or the purple candles on my case. Okay, we're going to claim the lows. People see green candles. Okay, we're going back to all-time high. You know, let's just trade level to level. That's all that matters at the end of the day. Let's trade level to level. On the 1-hour time frame, if I switch on my stuff, okay, I am focused on this little scenario. I'm focused over here. This is where I'm focusing at the moment. Okay, we played a short successfully here as a community this morning. I paid myself all the way here to the downside, and I'm leaving some of the position open for what if it falls and it comes and it claims these lows over here. Next area of important support that's supported by volume is this zone over here at $90,000, 800. Okay, but I will consider a swing failure pattern from these lows over here as well, because I know there's not a lot of volume supporting the move, but it is a Fibonacci level and I can trade it successfully if I see the price action that I like. Okay, so by me trading this range, by me shorting, by me longing, shorting, longing, shorting, longing, you guys get I am a day trader. I play the moves to the upside, I play the moves to the downside. So from a day trading perspective, I don't care whether Bitcoin is going to $1 million or whether we're going into a bear market, because I short and long during the same day. I don't care. From a spot bag perspective, it sucks. And I think, you know, from a day trading perspective, this is where I make the money to keep on pumping into my spot bags, you know, and pay my bills and pay for whatever I need. But there is, you know, a portion of my portfolio that is in dry powder, so that I, you know, if we do just fall here to the downside, I need to have dry powder to add to some of my positions. Okay, to drag my entries down, because my spot bags are not looking good at the moment. Some of them look good, but some of them like dismal at the moment. Okay, but luckily my biggest holding is Bitcoin. Okay, so luckily. Right, cool legends. Something else that I wanted to point out: Dewald, hoping is not a strategy. Yes, Satoshi, I agree with you 100%, and this is why I'm looking for a reaction when you hit support. Okay, and when you hit resistance, you short. Okay, this is why we played the short successfully as a community. So I agree with you. Hope is not a strategy. So from a long-term perspective, there's a little bit of hopium, because the larger time frames has so many scenarios that could play out. But long-term, I am still bullish. And this is why in my day trading, I make money to add to my spot positions. Always have to have for that's my strategy. Okay, this is, you know, each to their own. That is my strategy. I make money with day trading to pay my bills and to add to my spot positions. If crap hits the fan here to the downside, I want to have dry powder to add to my spot positions. So there's a little bit of hopium from a spot perspective, But there's also technicals that tells us that the probabilities of claiming the high is still higher than claiming the lows. So based on probabilities, I am still adding to my spot positions. Okay, so a little bit of hopium, but there's some strategy behind it as well. Right. 5-minute time frame. I've just been on the smaller time frames during the beginning of the live stream. Something else very peculiar that I want to point out over here, legends, is that when I look at Bitcoin, okay, guys, before I continue over here, remember, okay, don't miss out on these deals. First 100 people that sign up with the link down in the description for weeks gets $100 for free. You also get 20% discount on the money that you deposit in your features account and 25% discount on your trading fees, right? And you also get that chance to spin the wheel. Also your way to support the channel. And then I've got Bluffin as well. The more you trade, the more money gets airdropped into your account. You don't need to submit any documents to start features trading. Right, if you want to come and join our pro community where myself and Andy and the coaches provide daily technical analysis and education, like the trading setup that I'm discussing at the moment, here's the link down in the description. Okay, so legends, now, when I look at this, okay, we've discussed Bitcoin in so much detail. We can now potentially say there's a 5-wave here to the upside. When I look at Fetch, and some of the other altcoins as well, there's a problem. Okay, there's a little bit of a problem here on Fetch because I am quite bullish on Fetch, but there's a problem here on Fetch. It needs one more high. Do you guys see the problem? 1, 2, 3, 4, 5. Wave 1. Corrective structure in 2. Okay, so now we have a 1 and a 2. You have 1, 2, 3, 4, 5. Okay, now we have a 3. So a 3-wave structure gives you an A, B, C. We still need the 4 and we still need the 5 for this structure to be bullish. We need another high. So there's a problem. If Bitcoin is going to start falling here to the downside, okay, and let's just play out worst case scenario. Let's say it just falls and it finds support over here. Coins like Fetch, for example, is most probably going to come and take the lows because it needs one more high. If Fetch made a 5-wave structure and Bitcoin was now starting to correct, I would have said, boy oh boy, this looks very interesting for a higher low and continuation in a 3rd wave to the upside. But now there's a problemo. There's a little bit of a problem. Okay, so what could happen, okay, and this is one of my theories, what could happen is, let me just take this out the way. I'm just applying basic technical analysis over here. In a 1, 2, 3, your 4th wave has a maximum target of the 50% Fibonacci, right? Beautiful support here in this consolidation area. So if there's any chance for the bulls to still create another high here on Fetch in a 3-wave corrective structure, this is where it has to find support. If it taps the 0.618 golden pocket, you increase the probabilities that you're going to come and take the low, and this is a 3-wave structure to the upside. For this to form a double 1-2, your second 1-2 is incredibly large compared to your first 1-2. So it's not an invalidation, but it's something that I keep in mind. Ideally, still what you would like to see is for Fetch, okay, to form ideally a higher low in this zone. So it could be, right, we don't know how the structure is going to play out on Bitcoin because I have to consider Bitcoin when I start looking at some of these alts as well. It could be that, you know, maybe this is A, it goes back up for a B flat, and then it goes back down for a C. So you create a flat structure, and that little move up gives some of these altcoins the momentum to go and complete their 5th waves. And then when Bitcoin comes down for its C wave, right, these altcoins will then come down for their correction. Okay, but I just wanted to point out, Fetch has a 3-wave structure. So based on where price is at the moment and based on this high, the probabilities for now are higher to come and claim this low, unless it can find support and create another high. Okay, you need a 5-wave structure for momentum to continue to the upside. If you form a 3-wave structure, it's a corrective structure, and then impulses are going to continue to the downside. Link has the same problem. Same problem. You can see I'm tracking Link very aggressively over here. 1, 2, 3. Okay, the 4th wave at the moment is at the maximum retracement target. Link needs to form another move to the upside to complete a 5-wave structure. Okay, unless also, you know, the only other bullish case scenario, if it doesn't find support at the 50% and go and give us another high for us to see a beautiful 5-wave structure so that the retracement becomes bullish for continuation, the only other scenario is a double 1-2. Which is more bullish, actually. It's way more bullish. There's just a couple of problems with a double 1-2. Okay, if I take, very interesting, almost tapping the 1-to-1 extension over there. If I take a fib extension and I measure a fib extension, okay, from this low to the high, and put it on this low, is close enough. Okay, just want to point this out. This 1-2 and this 1-2 is slightly bigger than this 1-2. In Elliott wave theory, it's never an invalidation. Ideally, what you would like to see is a large 1-2. If you're going to create a second 1-2, it becomes a little bit smaller. If you're going to create a third one, but you guys can see it forms that contracting move. 1-2, 1-2, 1-2, and it explodes in a 3rd wave to the upside. Okay, the problem with Fetch and Link that I'm looking at over here is that this 1-2 is bigger than this 1-2. So it's not an invalidation, it just lowers the probabilities. Right. So just interesting to note here on Link, for example, I know I'm talking about some altcoins here as well, Legends, is that it is almost here at the 1-to-1 extension. So if I measure the corrective structure here to the downside, it's hitting some very key levels over here. 1-to-1 extension, which is a corrective structure target. 1.236 and the 1-to-1, the 1.618. But I mean, this is already too deep, because if I take a fib from the low to the high, okay, even the 1.236, you're already going to tap the golden pocket. But then you do open up the door, right? Maybe this is going to be more bullish than what we think, Legends. If this corrections keeps on dumping here to the downside, it taps the 786, the 1.618. You could have a 1-2, 1-2, and it just rips like a crazy maniac here to the upside. Okay, but for now, I'm just looking at a simple 5-wave structure. It needs to find support where it is right now at the 50% and give us one more high. Okay, then you have a 1, 2, 3, 4, 5. The correction becomes interesting and you play the 3rd wave to the upside. Okay, the risk is A, B, C. This is now the risk. We have a 3-wave structure to the upside. The risk is that it can, because of the 3-wave structure, it can still come and claim the lows. Okay, right, let me go through some comments. I feel like I've done enough. I've said enough. ETH, I wanted to discuss ETH as well, but I want to leave some content for the rest of the week. Okay, I don't want to give all the alpha away just here on a Monday, and then I have nothing left to talk about during the other days of the week. Right. Cool. I think BTC is starting to move up. 5-minute time frame. Let's go and scalp. Let's zoom in here. So I mean, Legends, if BTC, that's what I'm saying, you know, during the beginning of the stream, we were discussing this. Okay. If Bitcoin can find the strength to move and not claim this low, okay, and this becomes a 1, 2, 3, 4, 5. This was a very deep corrective structure that tapped the 0.88. There's a chance that if Bitcoin can hold this zone, break the trend 1, 2, 3, 4, 5, the correction, I'm going to be very interested in buying up that all of these structures on the altcoins will also make that final leg to the upside. The retracements will then become bullish. It's very interesting to note that Fetch and Link are hitting the maximum targets. Fetch is almost here at the 50%, almost. Okay, but the 382 and the 50% are fourth wave targets. Link is actually tapping the 50% at the moment, and this is why I have this trend. Okay, this is why I have this trend. Not a bad idea to play the swing failure pattern. Not a bad idea, right? Okay, this is what I mean. You're trading above your area of interest, your stop goes below the low. Who knows, right? Great risk management, or you wait for the break of the trend. Okay, especially if Bitcoin can find strength here and surprise everyone, like almost took the damn low. And then it turned around and did something that no one expected. Okay, it formed a 1, 2, 3, 4, 5 here to the upside. Beautiful. Damn, right? It will also give the altcoins that opportunity to go and complete the fifth waves to the upside. Because at the moment, some of these altcoins have 3-wave structures. Not what we want to see. So if Bitcoin is going to continue the correction here to the downside, and then the only other thing is double 1-2s, and I've discussed with you guys the probabilities of the double 1-2s because of the second 1-2s being larger than the first 1-2s. Not an invalidation, but it's not pretty at the moment. There is 5-minute trend. Is there a 5-minute trend line? Well, this is the I mean, if you want to scalp, guys, if you really want to scalp, okay, let's see on the 1-minute time frame. I actually traded on Friday with the Legends Pro community. I actually traded the 5-second time frame. But yes, you need an exchange with low trading fees if you want to benefit from those momentums. Yeah, one could argue that you've broken out. Okay, I'm not a big fan of the 1-minute time frame, but if you're following your trading strategy, is okay, you have broken out of the trend. Your stop is supposed to go below the lows. From a risk to reward perspective, for me, it's not worth it. If you want to take it, okay, by all means, because here is your TP area already. Okay, you have a weekly point of control over there. Okay, so I did talk about this trading setup. I don't like it. Okay, yes, you know why you're entering, you know where to put your stop loss, and you do know where to take profits. It's the risk to reward that concerns me. And my rule from a trading strategy perspective is I am not allowed to enter a trade that has a risk lower than 2. So for every $100, I have to make $200 at least. If the risk to reward does not make sense, I do not enter the trade. I wait for the next trading opportunity. If you were brave enough to enter at the 0.88 all the way here to the bottom, then the risk to reward definitely worth it. Now that's a trade worth taking. Even if price continues here to the upside, I don't care, because as a day trader, I know that there's another trade around the corner. There's another way to get into this trade. But I have to follow my rules. It's my rules that keeps me successful. It's my rules that keeps me profitable. For me to enter over here, to speculate on this amount of cash, and I'm carrying this much risk, it's crazy. I can't. I don't care how high the probability is to still move up here. I don't care. I have to stick to my rules. Okay, right, legends, remember to smash up that like button. I hope you guys have enjoyed the live stream and the education and all the alpha that I've provided over here. If you're not trading, with the links down in the description to support the channel, where I organize you guys the best deals and bonuses. I'm not sure what you are waiting for. And right, legends, have a great evening, morning and afternoon from wherever you are from around the world. Until the next one, cheers for now.